Walk us through the trading action today.
Good afternoon, Guanxin. Sentiment was definitely boosted after more brokerages halted short-selling services and the Shanghai and Shenzhen exchanges announcing rules that ban traders from borrowing and repay stocks in the same day, sending a positive message to the market. CITIC Securities was up almost 3%, Huatai Securities up 2.4%. Those were two of the brokerages that announced that they were stopping short selling. Stocks rose across the board, and in fact, financials were the worst performers today, especially banks. The banking sector up just 0.5%. Defense stocks, like you mentioned, as well as tech stocks were among the best performers. China Shipbuilding and North Navigation Control were among those, jumping 10%. There were a total of 650 stocks that reached the 10% limit up, and only 60 stocks fell on the Shanghai and Shenzhen markets. Combined turnover slightly higher than yesterday. In Shanghai and Shenzhen, the combined turnover was 906 billion yuan. Guanxin.
Finally, a turnaround of sentiment. And Li Huan, a dumpling shop chain, is now preparing for listing. What's all the hype about?
Well, yes, we're talking about the steamed dumpling shop Qingfeng, which made headlines back in 2013 when President Xi Jinping visited one of its outlets in Beijing. Now, Qingfeng plans to list on the new third board as early as next March or April. According to Qingfeng's manager, the state-owned company plans to go public through a reverse merger because it will otherwise take at least 2 to 3 years to be listed. So what that means is that the company will do a backdoor listing by injecting its assets into a joint enterprise and then rebranding the name after the Shell Corporation gets listed. Analysts say that Qingfeng's fast growth and its state-owned background will be appealing to investors. The company now operates about 300 outlets, most of them in and around Beijing, and it aims to triple that number, so 900 stores nationwide within the next 5 years. Guanxin.
Wow, good for them. Who could imagine such great publicity? Well, some Chinese liquor makers are under investigation after China Food and Drug Administration found they were adding Viagra in their healthcare liquor, including one listed company, Hainan Yedao. How are its shares doing today?
Well, shares of Hainan Yedao fell 10% yesterday. It touched down 10% this morning, but closed 4% higher. The company has denied the allegation and said it will assist in the investigation. The state FDA found that 51 firms were illegally adding Viagra or sildenafil in their healthcare liquor. And out of these, 19 are currently under criminal investigations. That's including Hainan Yedao. Industry experts say healthcare liquor market is now worth about 13 billion yuan. It's still small, but the market is growing. However, safety problems like what's revealed in this investigation and problems such as false advertising will hinder the growth of the entire industry. Back to you.